Joining us now in a CNBC exclusive, Samsara CEO Sanjit Biswas. Sanjit, good to see you. I want to start on something that you said on the call about customers turning to AI and the fast payback ROI that they're seeing on your platform. Can you give some examples of the type of savings and how that's leading to increased product adoption?
Absolutely. Well, John, thanks again for having me on. One great example of this is customers using data and artificial intelligence to just replan how they run their operations. A great example of this would be Mohawk Industries. They're the world's largest flooring company, so they're making deliveries all over the place. They were able to analyze all of the stops they make along the way as they're running their routes, find ways to save about $7.75 million. So we're talking about almost $8 million in savings just from finding ways to run much more efficiently in terms of how many miles they're driving every day, which stops they're making in which order. And that's a data problem. It's something that people have a lot of trouble making sense of, but a computer can really look at it all at one place, figure out those trends and patterns, and help you operate smarter.
You also talked about the land and expand motion, getting a customer with maybe one product and then selling them multiple. I wonder at what point is there a concern about you running out of products to sell them? Can you continue expanding? How should investors think about the total addressable market available for the customers that you already have?
Well, I think one thing that's important to remember is our customers have large, vast operations. These are very big enterprises. They have a lot going on. And so often what happens is they'll start with Samsara in a pocket of what they're working on. That might be a subsidiary, it may be a region. And so they'll expand just simply the amount of their operations that's on the platform. And then, like you said, we have a lot of different products on the platform, so they'll go deeper. A great example of that would be adopting commercial navigation. That's a new product that we just released. The idea is that instead of using Google Maps to figure out which way you're driving your trucks, you should use a commercial navigation product that's aware of hazmat restrictions and bridge heights and all of those other kinds of challenges that large trucks have. So many of our customers will start with one of our core products and then expand over time to say, hey, we're going to do routing, we're going to do commercial navigation, we'll do maintenance, we'll do training. There's a lot more that you can do on our platform.
We were just talking to Mike Santoli about this idea that investors are seeing this tariff shock being absorbed by companies right now. And I wonder what it's meant for you and whether tariff headwinds at the beginning of the year maybe are becoming tailwinds for you now.
Well, I would say that there was a definite shock to the system when the tariffs were announced. When they rolled out in April, the magnitude of them was pretty severe, and many of our customers were simply just trying to figure out what did they need to reposition to do. Now they've had a time to digest that, absorb what that means for their business, and what they're saying is, okay, these tariffs are going to be here to stay. The rates may fluctuate a little bit, but we need to find ways to be a little smarter and more efficient in our operations. Specifically, they're sweating assets longer, they're running them for extended periods of time. They do that through smarter maintenance schedules, through better utilization. So all of this is, I think, resulting in people getting a little bit smarter about how they operate. And for us, that means that they're going to want more data.
How is your growth in Europe similar to or different from the profile that we've seen thus far in North America?
I would say a lot of similarities. These industries that we serve, they're very much global in nature. You're talking about construction and utilities and all of the physical operations businesses. So that's the same all around the world. What we're seeing in Europe, though, are higher fuel prices. So energy is simply more expensive for them. They're more conscious about how fuel efficient they can be. The way that they think about risk is also very similar, but has some regional differences. But overall, the adoption curve is very similar. I would just say that the U.S. Is a much larger geography, a much larger market. But what we see in the UK mirrors what we see here in the US and Canada, for example.